I believe the picture is emerging in the housing market as one where the downturn that we've been having across 2022 is starting to ease up a little. We've seen a few more buyers in the housing market, particularly for Sydney and Melbourne. The other piece of information that came out through the CPI is that official rents are accelerating, and that may well have ramifications for the overall CPI read as we go further into 2023.
When we look at the numbers, the CoreLogic numbers that were out today, they show that house price falls eased in February, with Sydney posting a rise.
Yes.
I mean, according to your data, do you think that's going to be a short-lived reprieve?
Our data is consistent with the CoreLogic numbers, so we're noticing that actual prices in terms of the rate of decline is starting to ease. We've also noticed that with auction clearance rates, which is a really good leading indicator of the housing market, we've actually seen a pickup across the month of February. So yes, our numbers are fairly consistent with the CoreLogic read, and that does suggest a downturn for now has just eased off. However, we still remain concerned that what we're actually seeing here is a potential false dawn in the marketplace, whereby the market may well be easing, but if we were to have further rate rises and a cash rate cross over that 4% mark, which we think is very critical, we could then see a second leg in the housing downturn, which would catch many potential new home buyers off guard.
Let's talk about rates then. We know that the housing market is very much dependent on what the RBA does next. Given today's GDP numbers, what do you expect from next week's meeting from the Reserve Bank?
I think they'll still lift the rate. I think we can expect another 25 basis points. I believe the Reserve Bank focuses on the quarterly read on CPI, less so the monthly read. The monthly read may well give them some indicator, and there is certainly some information through the GDP which will give them a platform potentially to be a little bit less hawkish than what they have been in recent weeks. But I think they'll still play it safe, and they will lift next week, and I suspect they'll lift again in April too.
You mentioned the CPI monthly numbers that were out. A key component of that is rents. What is it telling us about the rent situation? Because we hear so much, we do many stories here about the rental crisis.
Well, up until now, the official read on rents, which does come from the ABS, has suggested that we've only had moderate rental growth across 2021 and 2022. However, other measures of rents, such as asking rents, suggest that rents have actually skyrocketed. So CoreLogic's numbers, our numbers from SQM Research have pretty much said the same thing, that rents or asking rents have risen by over double digits on a per annum basis. We've actually got them up as a capital city average by over 20% per annum. So we believe that the official series will be catching up to asking rents. It has in the past. The Reserve Bank of Australia has also made note of that as well. So we can expect that rental component within the CPI to accelerate from here, from the ABS. Now the question will be, will the RBA see through that? Because it will have an impact upon the headline CPI over the course of 2023. Rents represent the single largest component of the CPI basket.
So do you expect the Reserve Bank to take that out to smooth the quarterly CPI?
Potentially they could. They'll read it in conjunction with what's going on with asking rents, and then make their overall assessment, obviously taking into account other factors and other costs in the economy.
Something else that came out today was the household savings rate has fallen back to 4.5%. That's to pre-pandemic levels. How concerning is that with respect to loan serviceability?
So far, loan serviceability has actually held up. We've hardly seen any distressed sales in the marketplace. That number's actually been very benign. And it's also noted that the banking sector is recording very benign defaults and arrears. However, with the falls in savings, it's pretty clear that many borrowers out there have been drawing on their savings, their redraws, their offset accounts to get by. How long that can go on for, we're not so sure. But we are getting to the point where surely some of those savings are becoming exhausted.
So what then, Lou, are you forecasting for the housing market and the rental market throughout 2023?
If the Reserve Bank of Australia does go on pause with a cash rate below 4%, we believe this recent stronger activity we're seeing in the market will continue, and we'll actually see a recovery in the housing market. It will be driven by the increase in rents. It'll be driven by a rather large increase in underlying demand with the international borders open and a rapid increase in migration. On the other hand, if the RBA has to lift the cash rate above 4%, this is when we'll start to see real stress in the housing market by existing property owners, and it is very likely we'll see an acceleration in distressed sales activity, and that will put downward pressure on prices as we go further into 2023. On that scenario, we believe we would see housing prices fall by another 8% this year.
And on rents?
On rents, at this point in time, we're not seeing any great relief. So we've recorded another 1.5% rise in asking rents this current month, and rental vacancy rates are still running at 1% around the country, which is awfully tight. So it's certainly very much a landlord's market, and landlords are taking advantage of that at this time. So it's very likely for now we're going to see continued rental increases with asking rents as well as the official series from the ABS.
Louis Christopher, thanks so much.
Thank you.